All right, now let's look at a situation to logically understand shareholder rights when we talk about stock valuation and our own holdings and stocks. Once again, we're using Brigham and Houston's Fundamentals of Financial Management. Now, the question says, it is frequently stated that the one purpose of the preemptive right is to allow individuals to maintain their proportionate share of the ownership and control of a corporation. And these are the two things we want to look at. We want to look at preemptive rights and our ability to maintain proportionate shares of ownership through preemptive rights. So part A says, how important do you suppose control is for the average stockholder of a firm whose shares are traded on the New York Stock Exchange? And part B says, is the control issue likely to be of more importance to stockholders publicly owned or closely held private firms? Explain. Now we're going to discuss part A first, because that lends more context to the situation. If we consider the average investor of a firm that's traded on the New York Stock Exchange, then quite frankly, this average investor is not necessarily interested in maintaining that proportionate share of ownership and control. If the investor wanted to increase his or her ownership, then the investor would simply buy more stock on the open market. This is where they would go. They'd go to the open market if they wanted to maintain their current ownership or if they wanted more shares. Consequently, because most investors are not concerned with whether or not new shares are sold directly at about market prices or through rights offerings, so it's irrelevant for them whether they get it from the open market or they get it through a preemptive right. However, if a rights offering is being used essentially to effect a stock split, or if it is being used to reduce the underwriting cost for the company of an issue, then the preemptive right itself may be more beneficial to the firm and to its average stockholder as well. Okay, so this is the key there. Now, when we look at part B and we say, is the control issue likely to be of more importance to stockholders of publicly owned or closely held private firms, then essentially when we've analyzed the situation above, then it makes more sense when we say that the preemptive right is more important to stockholders of closely held private firms. Because in this particular case, the owners are always more interested in maintaining their relative control positions. And this is important. The difference in the interest in a control position. So the average stockholder is simply interested in the investment. And it is irrelevant to them whether it is through the open market or through a rights offering. But for a closely held private firm, those individual stockholders are interested in maintaining their relevant control position. And they'd most likely want to take benefit of perhaps the underpricing through the rights offering. So keep that in mind. If you have any questions, please comment below. Don't forget to like and subscribe.